Hello traders, it's Jeffrey from Ninjacators. Believe it or not, we are rapidly rolling into the holidays. So I wanted to give you some trading tips, 3 futures trading tips for the holidays so that you can hold on to your profits and minimize any losses. You need to protect those trades like no other time during the year. So let's just jump right into the charts, and first I'll show you what I usually look at, and then I'll give you a couple of tips. So I'm looking at one of my typical charts here. I like to put my support and resistance zones on the chart, as well as my real-time supply and demand zones. I trade using MACD divergence, and most importantly, I love to have the volume and momentum right on the chart with me. Now, the most important thing during the holidays, during any important holiday, or for example, today is FOMC day as well, is to pay attention to the volume. Volume is down. On the holidays, traders, particularly institutional traders, are closed or on vacation, so you are going to see a much lower volume, fewer trades, and a much lower liquidity. Now, what does that mean for us? Well, when volume is low, trades can be riskier, okay? There are rapid, unpredictable, sometimes violent price movements because there's just not enough orders in the book to accommodate all the trades, and you can see price jumping around like crazy. I personally hate it when I'm watching the tape jump all around. I like to sit back and wait for it to calm and settle down, but sometimes you just don't have that option because the only time that you have any decent volume is around the open, and it does get pretty jumpy. So look out for low volume and rapid, jerky movements, okay? Stay back, wait until it settles down a little bit, and then trade. Now, the other very important thing to watch out for with low volume is low liquidity. You are not going to see orders at every single price or tick point when the volume is low. What does that mean for us? Well, the spreads really stretch out. So that means if you are going in on a market order, whether it's a buy or a sell, you might not get filled, especially close to a jumpier time like the open, 10, 20, 30 ticks away on the NASDAQ particularly. So I hate market orders for that reason. I will only put limit buy or sell orders in, and I try very hard to put them right in on the chart and not just click away and jump in on the market, okay? Otherwise, you will be very surprised to find out that you're filled far away, and as soon as you get filled, you're already in the red. So stay away from market orders when liquidity is low. Next, when volume and liquidity are low, you really have to be patient. If you normally see a couple of setups that you pay attention to right around the open or in the first half an hour or hour, you might have to wait twice as long to see your same setups for the market to really cooperate with you. So if you really must trade around the holidays, be patient. Do not chase trades if you don't see your setup at the time of day that you normally might find it. Just hang on there or don't trade. Remember, the only trade you can't lose a penny on is the one that you're not in. So if you're sitting on your hands because it's not a perfect setup, another setup will always come along. Now here are another couple of tips. When volume is low and liquidity is low, why don't you just trade half of what you normally trade, okay? If you're a 2-lot trader, then just trade 1 contract. If you are a mini trader, then use the opportunity to switch to micros, okay? Remember, if you trade multiples of micros, you can still trade a maximum of just 1 contract. Let's say 3 micros, 4 micros or 6 micros, and split it into a couple of take profit points. You'll do fine that way. Or lastly, maybe during the holidays, that's a great time to just roll it into Sim, try out some new strategies. You can trade like crazy in Sim and experiment, and you won't get killed and you won't lose. There's nothing worse than looking for what looks like your typical great trade setup and have a sudden, dramatic, volatile reversal, and boom, you're in the red. Now, couple more important tips. The Santa Claus rally. Everybody has heard of this. Right around Christmas time, suddenly you find dramatic longs in the market, quick reversals, but what is the reason for it? Why does it happen so consistently? Well, the big institutional traders, they're not just closing out the books for December, they're closing out the books for the entire year, okay? And there is a push and a drive, and some would say manipulation of the markets to drive prices up. So keep an eye out for that rally, okay? I'm going to show you in a second how you can spot great places to go long using the indicators that I typically use. But lastly, and what's most important right around this time is watch out for news, okay? News can be volatile on the markets, but this time of year, when volume and liquidity are low, you see absolutely inordinate changes and moves when there's a news break. So pay attention to your calendar. Know when the news is going to be released and stay away from trading around the news. Typically, it's dangerous to trade around the news anyway, but during this time of year when volume and liquidity are down, it's extra dangerous. So let's take a look at the charts, and this is just a recap of this morning, and I wanted to show you, if we pull it back to the overnight, here are the support and resistance zones. These are plotted automatically by our indicator, okay? That's the dynamic support and resistance zones. You see it up here, and during the overnight, you can see hardly any movement at all, hardly any volume at all as well, okay? So when you see these zones so close together, be careful. There's barely any movement. But as we get into the open, you can see how those movements in real time are going to dramatically change. And what I'll be looking for is, for example, right around here, right at the 9:30 open, I got a long divergence signal, and I'm just kind of sitting on it and waiting, and I'm looking for a change in the volume. Now, let me tell you about this bid-ask momentum. Obviously, green and red. Green indicates more buys or asks on the order book than sells or bids. And when the momentum is strong, it moves in the positive direction. When momentum is weak, it moves in the negative direction. So if I'm thinking of a long, if I've got a long trade here, I want to see it go green and go positive and all the way up. So right around here, where I'm starting to see it go up, I'm jumping in. And here's my confirmation that this is going to push up all the way, and I'm going to ride this all the way up until I start to see it peter out a little bit. I might have jumped out anywhere right around here when I started to get reversal signals on my NQ signal. Now, if we move it a little bit further down, once I got either one of these or several of these signals for a reversal or a break in my golden reversal line, I'm also seeing a push to the downside with an absolute indication that momentum is falling and expected to see it come right down. Okay, now let's take a look and see if we missed anything else to go over. So for example, when we saw the golden reversal line print over here, we're looking to see whether or not it's worth taking a long trade. And if we take a look at this spot right over here where it crossed the line, we've got some positive momentum. However, it's going right into one of our resistance zones. So for me, I'm going to stay away from that trade. I want to see a lot of room for that trade to grow. So right over here, when we see the cross of the line, as well as the break below resistance, I'm going to look to see that head right down to support. So that's it. A few tips for you to watch out for potential losses during the holidays so that you can maximize your trade, stay in it, not risk anything. Hope everyone has a great holiday season, good trading, and we'll see you next time.